following is a presentation of TFNN. Now, live from TFNN, The Trader's Edge with Steve Rhodes. The Trader's Edge. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. At 727-445-1045. The author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the November 24th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have a magical Monday. And we should always remember that what's talked about is a dream, what's envisioned is exciting, what's planned becomes possible. But what's scheduled, well, folks, that becomes real. And I want to thank you for scheduling your time with me here this morning. I'm grateful for your presence. I'm here to serve you. Our call-in number is 877-927-6648. Internationally, 727-445-1044. If you give me a call, that's the best way that I can serve you. Remember, if you've got a question, somebody else has got that exact same question. So don't do it for me. Don't do it for yourself. A random act of kindness, and there's no better week to do that than the week of Thanksgiving. In fact, you know, what I like to call Thanksgiving. Thanksgiving's good, but Thanksgiving is even better. You see, Thanksgiving centers on giving thanks. And more importantly, a grateful mind is a mind that will attract itself to a great many things. Something to think about. In fact, it's your attitude, it's our attitude, my attitude, all of our attitudes of gratitude that open up the door for abundance in life. Yeah. And Thanks living, folks, if lived on a continuous basis, well, it'll create more good in our life than anything else that you and I can possibly do. Thanks living, it's a way of life no matter what our circumstances are. You see, what we really should be saying is being grateful for the challenges that we face. Yeah, being grateful for the challenges. Because, you see, when you and I overcome those challenges, those obstacles, and we will, there's no question about it, when we face those situations and we just simply overcome them, we simply become stronger. And that is a beautiful thing. So, yes, folks, this is the week of Thanksgiving, and I'm thankful for your presence here today. Present here today. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, Dow's up 16 points. Trade out at 17,826. S&P up 4. Trade at 2,067. Composite up 26 points. Trade at 47.39. Russell 2,000 up 8 at 11.81. DAX up 69. FTSE down 16. Gold is flat. Silver flat. Light sweet crude is basically flat out here. Leading the charge, the upside. Regeneron Pharmaceuticals up $5 out here. Receptos up $5. Amazon up 4. Outer Wall up 4. You got Biogen, BIIB up $3. Google's up $3. To the downside out here, Chicago Bridge, Omnicare, Azimil Holdings, Copa Holdings, CPA, down another couple of bucks today. Agrium, AGU, Potash, they're all to the downside. Mosaic out there. Again, give me a call, folks, 877-927-6648. Let's go begin by taking a look at the ETFs. Let's go look at the Dow Diamonds. Go see what she's doing. Up 21 cents today. 530,000 shares have traded thus far. What do we know about the Dow Diamonds? Number one, the Dow Diamonds, if you take a look at their swing point from September 9th's high to the low on October the 15th, from high to low, the Dow Diamonds on Friday got above the 1.272 expansion. That number was 177.41. You get above that, you stay above that, 182.62 becomes the next mark on our Fibonacci ruler out there. Until you see a breach of below 177.41, it should move higher. That's what's going on inside of the diamonds. Inside of the SPYs are up 45 cents right now. The SPYs here, they're just dealing with that 1.272 pole vault of the swing point expansion of it September 19th. Why do I have September 18th? I guess it's September 19th. High down to the low here on October the 15th. So it really needs to get above that 207.27 level, your 207.21. You get above that, 214.17 becomes next up as its target area. That's what's going on inside of the SPYs. The QQQ ETF trade up 56 pennies. She got above a couple of days ago, looks like on Tuesday, Wednesday, Thursday, Friday, Tuesday of last week. we saw the Qs move above its 1.272 expansion number. That was at 103.24. Stayed above it, tested it on the 19th, tested it again on the 21st, and then on Friday up and away, and had some increasing volume, 34 million shares, so as it was moving higher out there. So as long as the Qs are able to stay above 103.24, you're trading at 104.43. That says 106.78 should be next up on its target area. If we go take a look at the IWM, the Russell 2000, the one that has kind of been the most confusing out here, if we take a look at weekly swing points, she's got an inside day going on this morning, trade out at 117.47. If we take a look, I'll switch this over to a weekly chart. I'll show you exactly what I mean out here. You're going to see 3 dojis in Stevie's window. Very hard to do. Very hard to do. That's a doji for the week that began November 3rd, the week that began November 10th, the week that began last week, November 17th. 3 doji candles. Just tell you that the market is just tired. It was just simply tired. This week, if it's able to stay above these dojis, price ought to move up to the 121-ish area. 120.58 is where it will be headed to. The dojis themselves are not reversal signals out there, so be careful with the information that you trade with. So that is what's going on inside of the IWM. Let's go take a look at a couple of the sectors inside of the S&P 500. Let's go see what we know. Let's take a look at the technology sector, the XLK, and then we'll go take a look at Apple. Apple up 81 cents I see here this morning because of the weighting structure inside both the Qs as well as the XLK. If we take a look at expansions of swing points out here, meaning from the high of, in this case here, it's September the 18th, down to the low on October the 15th, you can see that the technology sector is right now trading right at the 1.272 expansion, 41.72. It's trading at 41.75. If you get above, I'd have to say, and close above Friday's high out there, which is 41.96. No reversal signal or anything along those lines, but you get above it. That has 6 million shares. You've done 708,000 shares in 45 minutes of trading. That'd be about 8 times 6, 4, lighter volume, but you should expect later volume. I'd say with regard to volume this week, we probably ought to say volume schmolium, if that's even a phrase out there. We'll just say that's a Stevie technical phrase out here because I think volume becomes least important of the 4 major type of areas or tools that we use to identify what price is doing. It's going to be a light trading week. We already know that, so we should expect that. So in this case here, if we get above, if the XLK can close above 41.96, pretty good chance it wants to move to the 43.12 level. Let's look at the XLF, up 17 cents right now, trade out at 24.38. It's already taken out the highs here from Friday. That bodes well. The XLF number 2 weighting structure, I believe, inside the S&P 500. The swing point, its most recent swing point on this was November the 11th, 38 million shares. Moved up into 20 million shares only on Friday. 4 million shares so far today. Actually not too shabby considering. If they take a look at expansions inside of the financial sector, from high to low out here, it's targeted 1.272. Expansion is 24.51. Looks like that is probably where it will head to today. That is on the XLF. Let's look at the weak link out here. That would be the XLE, the energy sector. Then we'll go take a look at IBM. We'll take a look at XOM and Apple, those 2 charts specifically. XLE is like trading ExxonMobil just simply because of its weighting structure inside of it. It's down this morning here, volume 4 million shares. Really just pulling back into the trading system, a little gap up that it had from Thursday to Friday, so the top of which is 87.49, has not gotten down there yet. The inter-session low, 87.60. If we take a look at the energy sector out here, let's take a look at retracements. Let's go from the retracement. Most recent swing point high, I'll take it August 29th down to the low out here. And then you're trading in between the 0.382 and 618 level. So you'd have to say 90.66 is probably the mark where the energy sector wants to head to. What we can see out here, if I delete this, I'll delete it. Go ahead. Okay. What we should notice here is, we do see higher highs and we do see higher lows inside of the energy sector, and that's the weak link out here. Let's go take a look at those two equities. Let's take a look at Apple first. Apple's trading out at 117.30. On Friday, Apple got up to a high of all-time high. I got up to a high of 117.57. Volume up there was 57 million shares. That's not pretty good because it was going against the November 17th level that had 46 million shares out there. So no reversal signal or anything along those lines inside of Apple. Where is Apple headed to? And that's an absolute great question out here. It's got so many different A to B equals CD patterns to the upside out here. I'm just looking for the most conservative one. What would the most conservative one be? It's a tough one. That's a tough one. It really is. Let me see what the weekly. Let me put up the weekly chart, see if it makes it a little bit easier just to grab. Yeah, so let's see. It's a huge one, though. It's a huge one. If we take, let's look at this. We're going to look at the expansion of the swing points. I think that's going to be the easier approach out here to get rid of that. Now, the swing point that I'm looking at inside of Apple on a weekly basis, September 17, 2012, 500 million shares, and as price got up and over that, it did it with 358. So it's up and over with light volume, and nonetheless, it's up and over. You're up and over. It says you want to go to the next level. Let's go take a look at what kind of expansion level we've seen here inside of Apple from its swing point high to swing point low. Again, it's a weekly chart. We're looking at September 17th, 2012 down to April 15th, 2013. So we can see here what we know about Apple is it has made the 1.272, and it did it with a wide-ranging bar. You're well above that level. Looks to me like what Apple wants to do is trade up to 128.97. As long as it stays above 113.16, you're $4 above it as we speak right now. 128.97 is likely the next area where Apple wants to trade to. That's taking a look at the weekly chart. If we go take a look at ExxonMobil, it's off $1 today, trading out at 95.82. Let's go see what ExxonMobil has in store for us. So ExxonMobil actually looks better. Well, this is the weekly chart. Take that back. Exxon, I was going to say it does look better than, maybe it doesn't look better than the XLE. I guess one way I could do that is just simply put it up on our chart out here. But in the case of ExxonMobil, as long as I've got the weekly out here, let me do this. Let's take a look at what ExxonMobil is doing from a channel standpoint out here. So let's see if it's gotten back inside its channel. So the channel line, we're going to use the body of the session from June 28, 2010. And I'd have to say we can use that as the channel line. Yeah, you got more than 3 co-located opens and closes out here. Let me see along the top. I'm not going to worry so much about the top, but it's probably right about there becomes the channel line. I can go ahead and slide that back just a tad if I can grab it. There we go. We'll grab that and move it back, something like that. So there is your channel line. So what we know about ExxonMobil here as I pull this back is ExxonMobil broke through the channel line. When you break a price channel, this is a diagonal price channel out here. This is a weekly chart that we're looking at. When you break a price channel, you like to see price come back and test it and reject it if it's really a breakout. Now, when stocks are moving to the upside, getting above a channel line isn't a breakout. It was already moving to the upside. Your break of a channel line, of a rising trend line, of a rising channel line out here, would be the one when we saw as ExxonMobil broke through it on the week beginning October 6th and obviously through the 15th. But price is back up inside that. It's actually bullish. Steve Rhodes, TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN
Tom
has brought our
O'Brien's
programming
weekly
to the
gold
next
letter,
level.
The Gold
With Tiger
Report,
TV,
gives
you can gain
complete
access
and
to each
concise
show's charts
coverage
and
of the
computer
entire
screens
gold
as they host
market.
their daily stock programs.
Inside,
Whether it's
you'll get
Tom
Tom's
O'Brien, John
commentary
Logan,
on
Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 24, S&P is up 5, and a big thank you to all those that attended the live workshop on Saturday that we kicked off. We kicked off a 7-week trading program. All those that are going to be attending the archive version, which is was more than 50% of the folks are doing the archive version. So thank you for signing up and joining me in the 7-week course. You'll get an email sometime later on in the day that the archive is up. You'll get my the slides, the must-have slides out there as well. And then over the weekend, I received a number of emails from listeners that said, hey, I like that idea of the gift of transformation. But they just really wanted, their loved ones. They said, yeah, we're going to be sitting around the Thanksgiving table. You're right. We're bound to be asked that question, hey, what do you want for Christmas? What do you want for Hanukkah? What do you want for whatever it is that you might be celebrating out there? And as opposed to asking for, opposed to saying, I don't know, well, yeah, give me the gift of transformation out here. You guys can chip in. And so what we've done here, if you still go to the homepage at TFNN.com, the good folks out here have made it so that they can buy this gift for you. So it's a 7-week trading program, even if you missed Saturday. And look, more than half of the folks are actually going to start watching the archive later on today or whenever. And the archive is going to be available on their members page, through February, or through a good portion of February out there. So there's really not anything that you're going to miss out on. So if you send your loved ones over to the homepage of TFNN.com, or if I'd ask you what gift are you going to buy yourself out there, come on over to the homepage of TFNN.com. It's not too late. You can still sign up for it. We're going to keep it out here so that you can send your loved ones out there and they can give you that gift of transformation. That's exactly what Saturday was all about. That's a 7-week trading program by yours truly out here. We've got the Dow's up 25, the S&P is up 5, and if we go take a look at a couple of things here that are moving, let's take a look at Alta Salon. She's jumped in the lead out here to the downside, off $2 and about $3 right now. Let's go see what Alta Salon is doing. I don't see any real news behind it. Some downgrade, no big deal out here. Now, Alta Salon has got a couple of nice breakouts here. The most recent one takes you all the way back into September 12th. And talk about wide price spread. Doesn't get any wider than that. That's from the, if you take a look at the wide price spread, the close of the prior session was 97.48, and the close of that gap up September 12th was 114.89. Yeah, that's wide price spread, accelerated volume out here. So it's pulling back this morning, 309,000 shares. Made a high here recently with 1 million shares, so the retracement here is pretty decent. Where could this thing pull back to? The problem here is that this sign of strength is so large. This gap is so large out here. You really got to gauge the swing point here of October 15th. I think that becomes, you got really two gauges. October 15th with 1.6 million shares, and you've got this gauge from that September 12th level right around the 118.20 level. That kind of becomes your price target for looking to get in on Alta Salon, assuming that it actually continues to pull back. No guarantee that that's what it will do, but it does have a couple of nice signs of strength out there. ULTA is the ticker symbol. Let's go check in on Priceline, see what Priceline is doing, up $7 this morning here. So Priceline traveling inside of its most recent gap down. It would do itself well, bode well for it to close that gap, repair that window. That means it would need to close above 11.97. You're at 11.58 as we speak right now. A series of small-bodied candles ever since this move out here on November the 11th. Just kind of tired out here. It's trying to get through. It's got a supply line. Bottom line is what it's got out here. That's where it's struggling. It's got another area so there's a couple areas of resistance inside of Priceline. One is right here at the 12.16 level. Another is right here at the 11.97 area. So that's some pretty stiff resistance inside of Priceline. PCLN is the ticker symbol. Okay, so we took a look at a couple of the ETFs. We took a look at the sectors, I should say. We took a look at the ETFs. Let's go take a look at some gold stocks out here. Let's go see what we've got going on in gold. So you got gold is just slightly green. It's up 60 cents. U.S. dollar index back at 18 pennies right now. So not a ton of movement out there. If we look at Rand Gold, GOLD is the ticker symbol. And what we can see here about Rand Gold is it has made its 0.382 retracement from its larger set of swing points. That's taken us back into July 10th, from that high at the 89.89 level down to the $58 area, which was on October 31st. So it's made the 0.382 retracement out here. If it can get above $70.18, you're trading at 70.12. And I don't mean 70.19. I mean, let's call it above the 70.72 mark. Then Rand Gold should head towards 77.71. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 26 now. S&P's up 5. Composite also up 26 points out there. Let's go. Chipotle leading the charge to the downside. Let's go check in on Chipotle. CMG is the ticker symbol. See what it's doing. Trade out at 652.97. Now, Chipotle, you can make the case that this wants to at least pull back into the October 21st level. That was a little bit of a gap down. It was a gap down with inside a gap, so Chipotle is kind of this little jumping bean out here. But it looks like this should pull back probably into that October 21st level between 607.55 and 629.50 out here. That's what's going on with ticker symbol CMG. Oh, you know what's interesting on Saturday's workshop? Pretty cool. It's pretty cool when you consider the reach that we have here at TFNN. So one of the attendees was from Hawaii. Of course, his name inside the Tigers Den at that stage, that was the den that we used for the workshop. was, I won't give you his name, but X from Hawaii. And so when the workshop was over, I pinged him and asked if he was truly in Hawaii. And he was. He lives in Oahu out near Diamond Head. And what was cool is, he was up early because the workshop started at 9. That 6-hour time zone difference, he was up at 3 o'clock this morning. So a real special treat for me, just simply because I'd have to say Hawaii is kind of my second home. And it's great over there. If you've never been over to the Hawaiian Island chain out there, you gotta make that. You gotta put that on your bucket list. And so it was very cool that he joined. I thought, maybe that might be the furthest away. And actually, in distance from Florida, it's possible that I don't know. I don't think so. Actually, no, I don't think so, because then maybe somebody can do the math for me. Well, I got a ping. Later on Saturday afternoon from one of the attendees, and he was from southern Italy. So I don't know if it's Sicily. We didn't talk about the area of southern Italy that he's from, but he was at the workshop, all the way from southern Italy. So that's pretty cool. There may have even been more out there. Next time that I do a live workshop like that, I'm going to have to ask, who's from where, just kind of get a feel for the country and the scope in which we cover out there. So really very, very cool, all the different folks from around the world that we are impacting out here. Let's take a look at, we were taking a look at gold stocks earlier. Let's go take a look at the gold stock that's really important for us to look at, which is Gold Corp. It's not there yet at an area where it's ready to break out. But if it does close above 21.42, that's $1 higher than where it's trading right now. It's at 20.58. The moment that it breaks that window, the moment that it repairs that window, what I mean is that when you gap up or down, in this case here was a gap down. That's from the trading session of October 29th, that low, that 21.42. That's really what we like to refer to as the window, as an area in this case here of resistance. And when price closes above that level, which is 21.42, then what you've got is that window is repaired, and that no longer acts as a resistance line in the sand out here. So once that happens, when Gold Corp is able to break through that, then that bodes well for the GDX because of its weighting structure within inside that ETF, which is like 13%, somewhere in that range. So at this stage here, it hasn't. Of course, you're also going to look for ABX. Barrick Gold, which is also in the top 5 holdings. Now Barrick does not have any real significant resistance that I can see or identify on this chart out here. As I pull this back, so there's no open window, there's no gap down that it's really dealing with. I'd have to say that in the case of Barrick, really, it just needs to clear this swing point here. That's got pretty good volume. That's November 18, 26 million shares. It's only done 3.2 today, but closing about 1332. That will bode well for the GDX as well as the Nugget, as well as the XAU out here. We've got one of the better mining equities, AEM, Agnico Eagle. Let's go see what it is doing out here. Now, if we take a look at its window of resistance, right? So a gap down is also in Japanese Japanese candlestick charting referred to as a window out there. And that's why we say, is it going to repair the window? So now you know where that comes from. In the case of AEM, gapping down on the trading session of October 30th with 5.4 million shares. So 27.83 is its magic number. You get above close above 27.83. That window becomes repaired. That bodes well. And actually then says where price ought to travel to is the next resistance zone, which is the next open window that I see here inside Agnico Eagle, which is at $40.12 out there. So getting above 27.83 would do itself real well. Apple's up $1.19. You got, as far as the weak sectors out here, you have the material sector and the energy sector. The XLB, let's go check in on that. That's the material sector. Gapping up on Friday. A little doji-ish, high wave-ish type candle. But the reality is, even though that's what the candle looks like, that's really not what it is. Why do I say that? Because you got this gap. You got to fill in the gaps out here. So if we take a look at the XLB, volume to the upside on Friday was 9.5 million shares. The day before, 3.8 million shares. This is a wide-ranging bar coming into what? Coming into a swing point. That swing point being back here on September the 22nd. That swing had 3.8 million shares. So the material sector, and what you want to do is you just want to fill that area in. You know, if I take a look, I guess I probably do. If I, maybe, yeah, that would probably be about it. I don't know that I can move it, though. I don't think I have that flexibility to move it. Do I? Let me see here. Yeah, we do. And it just kind of moves to, let me just do this here. I can widen it now. Just trying to make my point. Come on. If I give one more shot, if it lets me grab that. There we go. I'd have to really fill that in with green, but I can do that. That's really what the candle looks like out here. Let me take that from blue, change it to green. It's going to be a pretty wide candle out there. Oh, that's the wrong thing. I needed to do the color fill out here. Let's do that. See if that works. There we go. That sort of works out there. Kind of transparent. Let me make that transparency 100%. Oh, I meant 0%. There we go. I'll figure that out. And so that's really what the candle would look like. It's so that little gap up, that little what looks like a doji is really not a doji candle out there. Let's go to Victor in Paramus. Hey, Victor, how you doing today?
Good. I'm looking at T, the letter T. I don't know. Do you use point and figure charts? Is it still going higher? It has a big gap down today because they said of slower growth. That might be a good dividend play, or?
Yeah, I don't use point and figure charts, but do you use them? Have you been using point and figure charts for a while?
I look at them. Sometimes they're pretty good. Like it says it's going to 49. It's been pretty good with Apple. Like with gold, it says it's going to 90. With silver, it says it's going to $2 an ounce. So I don't know about that one.
Okay. Okay.
Pretty good. But see what you see with T and UNG. UNG in the point and figure says it's going down to 10. UNG is at the same price it was on February 2012 when it did a 4-for-1 split. So I'm just wondering what's going on with natural gas.
Yeah, we could take a look at both for you. But AT&T, this morning here it's pulling back. It's down with about 17 million shares out here. If you're looking to enter AT&T. What I would do is, first let me just see what it's done from a retracement. Now, what's your point and figure chart say on AT&T? What's that take you down
to? 49. I just use stock charts. I hit
I see, okay. Well, here's what AT&T...
Yeah.
Here's what AT&T has done. And here's the areas to be looking at in AT&T. So you can maybe use this in combination with your point and figure charts out here. Number one, today what it's done is a 0.618 retracement. So I would say, Victor, if the market is going to take off for the rest of this week out here, the work to the downside in AT&T could be over. But that's not your best buy. Your best buy inside AT&T is right around the $33 level. And that's the swing point from October 15th with 48 million shares out there. So the entry point into AT&T, as we speak right now, because today with the pulling back, you'd have to say is probably around 33.98 to 33.10. Somewhere in that range is what you should be looking for. And then what you like about AT&T, Victor, is July 29th, it had gapped up with volume. So it has at least a 52-week high. So AT&T has a high volume high. And that's at $37. So that's not your $49, but that's the pattern. And it looks like at some point in time AT&T will get up to that range. So you just have to figure how you want to scale into something like that. So does that help you out with we'll look at AT&T?
Yeah. You think that you think it's safe, that dividend, or not?
Yeah. I mean, I don't have any reason to believe that it's not. So yeah.
Is this? You think it can go down, though, or we're still in an uptrend? You know what I mean? That Dow component hasn't done nothing. It's at $34 for the past 3 years. Is that basing, or what's it doing?
You're right about that. It's trading in a consolidation, and the bottom of the consolidation is $31, which is even below kind of the breakout area that I gave to you. So, you're only, from a stock appreciation standpoint, you're pretty much only looking from a range between $31 and $38. Now, that $49, that it has to break out above its highs out here from back in April.
Yeah, well, they just announced they were going to have bad earnings, slower growth and all that. So what happens when their earnings come out? Do you think they pummel it again? Do you think we're like on a V shape going up now until earnings and then they pull it back again, or?
I don't know. That I don't know. There's not a V shape, so to speak, inside of AT&T. In the general market there is. And I still expect that the general market is going to continue moving to the upside.
Yeah, and then take a look at UNG, because I don't know if that's a broken thing or what. All I know, the natural gas prices is what it was in February 2012. It did a 4-for-1 split, and it was $22 a share, and it's still $22 a share. I don't know what the natural gas price was in February 2012. Maybe it was the same thing. I think it was higher.
Well, the UNG, it's an ETF that's meant to reflect natural gas futures contracts and the way that they roll. The way that I think a piece of information that you might want to consider. Let me pull up a PowerPoint that I've got, and then I can try to. I was going to buy
UGAZ. That's a triple play on gas.
Right, it is. Let me just try to post this here for a moment, and then I'll share with you something that's at least worth paying attention to, in my opinion. And that is that, give me a moment here, let me expand this out just a bit. All right, so if we take a look at natural gas, I'm going to post this up on my screen here. Are you watching this on Tiger TV by any chance?
No, I will tonight, though.
Okay, all right. So the chart that I just posted on my screen out here is a seasonal chart for natural gas. I think this might go back. This is the average over the last, Victor, could be 11 years, could be 15 years, something like that. So it's some decent range out here. And what natural gas does is it typically makes its lows sometime in the September, or the middle of September. Now, in this case here, that's not what took place for natural gas. And it basically moves up into the early part of December. I think this is basically shifted forward, because we didn't make our low until October. So the UNG play, you're really paying attention to what's going on inside of natural gas. So seasonally, what I can tell you, if that seasonal pattern is going to continue, and based on the cold weather that we've seen and all that snow in areas of the north, I don't know if that means that we're going to have one heck of a terrible winter season or not. But if it does, the seasonal pattern is lined up and says that it wants higher price. Now, if we look at the current contract out here for natural gas, what it has done, and it's pulled back. Let me put the daily chart on our screen. I think that UNG just pulled back to its gap, as did natural gas. So natural gas, Victor, between November 14th and November 17th had gapped up, and the top of that gap was the $4.18 level. And remember, if you were listening earlier, I was talking about how windows, basically, your gaps can really be your friend out here. And what natural gas did this morning was it pulled back to that area. That is a level of support. And as long as natural gas holds that 418 level, it's just come back to support and says that this would be the place where you would buy UNG or you would buy UGAZ.
Put it on a three-year weekly and do the Fibonacci retracements, because I think the high was 31 on UNG and the low was 14 or something. I think you had a 0.50 retracement too.
Well, the better thing inside natural gas, in my opinion, would be to look at maybe the continuous contract of natural gas versus UNG. And so if we do that, and I put it on a longer-term weekly chart out here, just to get a feel for what it's doing, because really the underlying instrument is really what's going on inside natural gas. And in the case of natural gas, which is going to be different than, remember, UNG is one of these double, maybe I don't know if it's a double ETF, but the way that it resets, it's just dealing with these, with the futures contracts out here. So natural gas is well off the bottom, which was April of 2012 out here. I believe that based on the historical chart, that you're going to see natural gas run higher sometime in between December 2nd to maybe about December 15th, 16th, 17th, 18th, somewhere around there. That's at the stage where, if in fact that pattern plays out, you got to start taking a look at taking your profits inside of natural gas. But we'll take a look at patterns and volumes as it gets up there. In the case of natural gas, it probably gets up to that 650 level. All righty? We might have lost Victor out there. That was Victor in Paramus, New Jersey. That was natural gas. This is Steve Rhodes at TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 20, S&P 5, composite up 22 points out here. So what's it take in order to reverse this market and get it to bearishness out here? I'd have to say a couple of different things that we'd have to take a look at. Number one, and a reason to maybe, pay attention to this. Let me first put this chart up here. Let me take a look at the New York, and we're going to first just focus in on the New York Stock Exchange here during the next couple of minutes. Now, the New York Stock Exchange, if you're watching this on Tiger TV, the upper portion of the chart is the actual composite. So 3,000 or so actively traded issues. The center portion is the top 100. So this is the large caps with inside of the New York Stock Exchange. And the bottom happens to be the international funds, the international 100. We can see the international basically sucking wind out there. I could say sucking something else, but sucking wind out here with regard to its comparison, its correlation to the New York Stock Exchange. And but with regard to what I want to take a look at is the large caps out here, what we can see is that they're up against the top of its rising price channel. That's been in place for a long time out here. And the last times that price has gotten up to the top of this rising price channel, we've seen either trade sideways or begin to pull back. So on the New York Stock Exchange, it's a totally different way to take a look at it. If we only look at the NYSE rising price channel, didn't understand what was going on with inside it, the large cap stocks out here, well, then we'd be losing a great bit of information. Now, we can fast forward over to the summation index for the New York Stock Exchange. That way we've laid that piece of groundwork. And as we move over here, you're going to have to get that price oscillator down below zero in order to truly change its trend. We saw one day, a one-hit wonder. That was the trading session. I believe that was a trading session of, when was that? Looks like maybe it was November 18th or the 19th out here when the summation index went ahead and ticked down. In order to tick down today, you need 1,122 or more net declining issues. We're not there. We're net advancing issues as we speak. So only if, in fact, because we're up towards highs, right? We're trading into, or it's trading into the swing point out here. The swing point high inside the NYSE, if you look at September 4th, or you come take a look at July 3rd. Right now, we'll just use the September 4th swing point. You're trading inside it. It says it should go test the high, 11,108.39. So, that's what it ought to do out here. So only if we see a change in trend with net declining issues, it doesn't have to be a lot of price destruction, then we would have the large caps with inside the New York Stock Exchange that are up at the ceiling. You'd have a potential change in trend here inside the NYSE, and that's what it would really take to say, okay, the market could move south. And folks, don't let anybody tell you. And I think the news is going to be out there that this week is the preponderance of information or evidence is that this week is a bullish week. BS. It's all before Steve. Go back and do the homework out there. Don't just listen to the news that gets pumped out there or something that you read. Read it and then go back and check it out yourself. I can guarantee you it's a coin flip. That it is not that this week is like at the bias towards being up and everybody ought to just load up and should have gone long this morning or Sunday evening when the futures opened up. That's just simply not the case. Now, we also want to pay attention to the summation index for the NASDAQ composite, but she's really rejected that change in trend. She has done it twice out here, so that would be another thing. You'd also want to see the VIX index move higher versus lower. Right now it's moving lower. The real key, in my opinion, for the VIX is if the VIX can tick below 1238 out there. It has not done that yet. The low so far has been 1266. But you tick below 1238 out there, and it says, hey, nothing but higher price. Folks, don't forget, send your loved ones over to give you that gift of transformation. This is going to be up on the TFNN site here for a bit. The 7-week trading program that I kicked off on Saturday, that archive is going to be available today. You'll have access to me by cell, by Skype, by email, whatever it is you need in order to take your game to the next level. Speaking of taking games to the next level, stay tuned. Our man Basil Chapman is up next. It is Marvelous Monday, full lineup today. Take care, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.